you're doing well. We should be beginning our class right away. So I hope you're live. So let's get started for today. So today I'll be talking about inflation, guys, and fundamental analysis. So I hope you are in, because today will be an exciting class. So give me a few minutes, I get my notes ready. So documents. So it won't take time, guys. We have done a lot of technical analysis. I really love technical analysis, guys, because now with technical analysis, at least you're able to know your entry and your exit. So let me get my charts ready. So today I'll be on Euro JPY. So because I need to get pairs that are moving. So my GU and EU has not been moving lately, but GU broke its, let me share my screen, guys. So this is my screen. So I wanted to show you, this was our last trade, CHFEN. There's too much consolidation, guys, as you can see. So let's go for EU. So I hope you're hearing me. So Muturi, let's link up. Go get a good pair for this week.
Yes.
We keep
so
repeating.
I look for that JPY.
Yeah. Okay. In case of anything,
no,
you let me know. Yeah.
I'm very supportive.
Okay. Sawa. Okay. Thank you. Okay. Good day too. Yeah. Sorry, guys. I've been having a lot of work. So let's get started. So I was on EU. So you can see for pound EU, nothing much. So GU broke yesterday, guys. So that's our GU. So you can see still nothing much. There isn't enough volatility. You remember we talked about Europe reopening. So Europe reopened on Tuesday last week. So that's what has been up. So let's look for something else. So I'm looking for a pair that's moving, because I'll be teaching you guys on how to trade on trending pairs and untrending pairs. So now today I'm going to be touching on trending pairs. So I have Euro AUD. This is a trending pair, and also have Euro Yen. So they are here. So I think my setup is ready for around there. So I need this there. So for today, guys, let me introduce you to fundamental analysis, because at least we have learned how to draw our support resistance. We did candlesticks. I've been sending you materials on the WhatsApp group. So today, let's tackle something called fundamental analysis. And in relation to fundamental analysis, guys, I'll be touching on what's happening on ground as at the moment. This is our manual. So if you don't have it, I'll send you via the WhatsApp group. So thank you for those guys who are on board. So we also record our classes just in case you miss out. So today I'm touching on fundamental analysis, and I'm also touching on a very, very crucial, let me touch it. This is a crucial, not this one. Okay, this is okay. So I'm touching on inflation. It's what we did yesterday with the last class. We touched on inflation. So let's see why is everything becoming very expensive? Why should you be budgeting and at least, be looking forward to see how you're going to look at your finances within the next few months? So this is the one cost thing that has been making things very expensive. So let's look at the definition first of all. So this is one thing we'll be also be tackling in fundamental analysis. So let's go to Investopedia, this one. So what is inflation, guys? And we are going to look this in relation to an economy. This economy has not been doing very well. Let me show you guys. It's called the economy of Venezuela, guys. So I want you guys to see what happens when a government makes bad decisions. This is how economy performs. So let's have a look at this. Then we are going to look at Japanese yen, or euro yen. We are going to basically see demand versus supply and how it operates. So give me a minute as these tabs open. So for inflation, first of all, before we go to inflation, this is what fundamental analysis is all about. So fundamental analysis is the study of how global economic events and other news affect financial markets. Fundamental analysis will encompass any news event, social force, economic announcement, federal policy. So tomorrow we are having FOMC to be a big day for the dollar and the federal rates and the interest rates. So that's why this class, we have to do it today, because tomorrow there will be big news. Even I think this week, tomorrow is Wednesday and Thursday. So fundamental encompasses any news event, social force, economic announcement, federal policy change, company earnings. So we're also having earnings, I think, for European banks this week. I had sent it on WhatsApp, guys. So let me give you the WhatsApp of what's happening for this week. Yeah, so on Wednesday, we are having European bank earnings and FOMC rate decision. That's tomorrow. Then today we are having Apple and Alphabet earnings. So both Google and Apple will be producing their earnings today. Yesterday was Tesla's earnings. They did over 1.something billion in revenue. So that means the market should be upward because they made more profit with more than $200 or $300 million. So then Thursday, we'll be having Amazon earnings. So that's why I'm saying it encompasses social force, economic announcement, federal policy change, company earnings, and what else? And perhaps the most important piece of fundamental data applicable to Forex market is the country interest rates. So I'll be dwelling a lot on the interest rates and interest rate policy so that you see how they affect the market. So the idea behind fundamental analysis is that if a country's current or future economic picture is strong, so like on the ground, how is the business activity? You know, are jobs reopening? Are we creating more positions? So that is to mean if a country's current or future economic picture is strong, their currency should strengthen. For example, in our country, if we get more jobs that were lost last year after COVID hit, if we get more employment, if we get more companies performing better in terms of earnings, sales, and the rest, that will mean that the currency will strengthen. So a strong economy will always attract foreign investment and businesses. This means foreigners may purchase a country's currency to invest or start a business. So if essentially it will boil down to supply and demand. I've told you I was touching on supply and demand. So a country with a strong and growing economy will experience stronger demand for the currency. So if people have more jobs right now, of course they can spend more. They can go to the mall, to the movies, you know, spend. At least you're spending. Somehow that money is being spent, because once you spend money, of course, the demand for that currency will go up, which will work to lessen the supply and will drive the value of that currency up. For example, if Australian economy is gaining strength, the Australian dollar will increase in value relative to other currency. One main reason a country's currency becomes more valuable as its economy grows and strengthens is because a country will typically raise interest rates to control what? Growth and inflation. So right now, I'm looking so much at what the Fed will do tomorrow, because economy is still reopening, but we can say like we are 100% there. We are still, we have to take strides, because this is the world, this is people, these are businesses opening and the rest of the world. So higher interest rates are attractive to foreign investors, and as a result, they will need to buy Aussie dollars in order to invest in Australia. So if they increase interest rates, that means once they reduce, they are reducing the control of supply. Once they increase, there'll be more supply of money circulation in the economy. So that means, of course, that currency will be attractive to investors. So when the interest rates are raised, you're looking at guys buying more. So it will drive the demand and price of that currency and will lessen the supply of it. So let me talk on, before I touch on them, or to touch on inflation. So this is inflation, guys. Inflation is the decline of purchasing power of a given currency over time. A quantitative estimate at the rate at which the decline in purchasing power occurs can be reflected in the increase of price. So this is how I'm going to explain it, guys. This is important. So today we are not touching a lot of theory. I mean, a lot of technical analysis. Today we are more on fundamental. So if you break 1,000 bob right now, it's not the same as the way you break it 3 years ago or 5 years ago. The price of bread, probably 3 or 5 years ago, was 30 shillings. Right now is at 50 shillings. So what has driven that price up is because demand has gone up. last year when COVID hit, there was no demand because we were all on lockdown. So right now, most people are saving up, or most people, the money they were getting, they were putting it in savings. So right now, as the world continues to recover from the pandemic, more people want to come and buy from shoes, groceries, clothes, cars. Right now they are like, I saved up, now I wanna buy something. So this is inflation, because now the prices are going up, but the purchasing power of that currency is down. So this is to mean can be reflected in the increase of an average price level of a basket of selected goods and services in an economy over some period of time. The rise in the general level of prices, often expressed as a percentage, means that a unit of currency effectively buys less. So that is to mean it's the same 1,000 shillings, but right now it cannot accommodate the things I was buying 3 or 5 years ago, because now the purchasing power has gone down. So inflation can be contrasted with deflation. So let's also look at what is deflation. So this one we have seen is the value of a currency is rising, consequently the level of goods and services are rising. So the prices are high up, but the purchasing power is low. So deflation is the opposite. It's the general decline in the prices of goods and services, typically associated with a contraction in the supply of money. So right now, during deflation, the purchasing power of the currency rises. So here now the prices are going down, but the purchasing power is going up. So this is the opposite. So it's the general decline in the price level of goods and services, usually associated with a contraction in the supply of money and credit. But prices can also fall due to increased productivity and technological improvements. So sometimes also, if you have more production and more technological improvements, the prices may tend to fall. Whether the economy, price level, and money supplies are deflating or inflating changes in the appeal of different investment options. So understanding deflation. Okay, welcome, Shani. So deflation causes the nominal cost of capital, global goods, services to fall. So basically it's the opposite of inflation. Inflation, prices are going up, purchasing power is going down. Deflation, prices are going down, purchasing power is going up. So this is one economy that has been really hit by inflation. I think you can see, guys, everything is red. You can see population, GDP. All I needed you to see, you can see they have been reporting negative GDP growth. So there was a collapse of their prices, and that's what caused, because they devalued their currency. This is, and you can see inflation has hit almost 3,000%, which is really, really bad. So anyway, I don't need to go through much. So I just wanted to explain what is inflation. Prices, or basically the decline of purchasing power of a given currency over time. So within the next 5-10 years, you need to come invest in Forex, you need to make money, you need to increase your income household, because now if inflation will keep hitting us, oil prices keep going up. So as we have seen, I think right now we are at $73 per barrel. So basically cost of living will go up. Why? Because a quantitative estimate at the rate at which the decline in purchasing power occurs and can be reflected in the increase of an average price level of basket of goods and services in an economy over a period of time. So I think that's okay. So let me also touch on some things that basically affect us. So GDP report is one of the most important economic indicators. It's the biggest measure in the overall state of the economy. So it's basically GDP is the total value of all goods of services, all monetary goods and services. And basically it's released at 8:30 a.m. GDP is the aggregate total monetary. So the word is monetary, anything with the money, value of all goods and services produced by the entire economy during the quarter. So we are in the third quarter right now. So we're almost ending the year. Being measured, this does not include international activity. The growth rate of GDP is important number to look. So it's good for you to know that. So then we have trade balance. So GDP basically is like the value. If you look at our economy, Kenya, for example, we can be able to know what's our GDP. What's the total value of all goods, of all monetary value of all goods and services. Anything monetary, goods or services produced by the entire economy is what we call as GDP. So if GDP is higher, of course, the currency should be higher because now you're producing more and your revenue should be up. Trade balance is a measure of the difference between imports and exports. So your country should be producing more than it's buying. So whatever you're selling outside to other countries should be more than you're selling. I mean, whatever you're selling should be more than what you're buying. This is what we call trade balance. It's the level of a country's trade balance and changes in exports versus imports is widely followed by an important indicator of a country's overall economic strength. It's better to have more exports. So you can see, guys, it's better to have more exports than imports, as exports help grow a country's economy and reflect the overall health of its manufacturing sector. So manufacturing is a big deal. Shoes, clothes, Lysol, or anything else. Consumer price index. So let's continue. Consumer price index. Under consumer price index, we are looking at CPI. This is a report mostly widely used to measure inflation. So as again, I was talking a lot about inflation today. We have said inflation is basically where the prices are going up. So it's good I always have this, because mostly, yeah, it's the decline of purchasing power of a given currency over time. Just remember that. So decline of purchasing power. That means the rise in the general level of prices, often expressed as a percentage, means that a unit of a currency effectively buys less. So purchasing power goes down. That means a unit of a currency will buy less than it did in the previous periods. That's why I was equating it to 3 or 5 years. So when this happens, of course, the prices are soaring up, but our currency value is down. The reason this happens, most likely, like last year, they pumped in an extra $2.4 trillion in the economy. So that means they printed. So if that happens, the value of this currency will go down. The dollar has depreciated within the last 20 or 30 years. Why? Because it's fiat. It's given, it's a legal tender, basically, that is given by the CBK for guys to be able to purchase goods and services, or to be a medium of exchange. So let's go to CPI. So measures the change in the cost of a bundle of consumer goods and services. So this is everything you buy, from bread, all that basket of goods and services, excluding automobiles and energy or oil. So that's what we call CPI, Consumer Price Index. Then we have PPI. Along with CPI, PPI is one of the most important measures of inflation. Now, this is for the producers, guys who have companies. This report is released at 8:30 during second full of each month and reflects the previous month's data. The producer price index measures the price of goods at the wholesale level. So to contrast with CPI, the PPI measures how much producers are receiving for the goods, while CPI measures the cost paid. So you can see PPI will measure how much producers will receive, while CPI measures the cost paid by consumers. And then we have employment indicators. We usually have a live event every first Friday of the month, which is the NFP. We usually trade these NFP. So these are called employment indicators. This is one of the most important factor. The most important employment announcement occurs on Friday of every month at 8:30. Announcement includes the unemployment rate, which is the percentage. So when looking at employment, we are looking at unemployment rate. That means, has it gone up or down? Means the number of people employed during that month, was it up or down? That is to mean, so then we look at this unemployment rate, which is the percentage of the workforce that is unemployed. How many people who don't have jobs? Then the number of new jobs created. How many jobs did you create? Then we look at the average hours worked per week, and average hourly earnings. I think right now it's usually between $10 to $11. So Biden was trying to float a bill to raise it to $15 an hour, but we don't know, because that has to go through Congress. This report often results in significant market movement. You will often hear traders and analysts talk about NFP. Means this is non-farm employment report, and it perhaps is the one report each month that has the greatest power to move the markets. So I really enjoy trading NFP, because NFP basically gives us a clue of how the economy is doing. If we have more people employed, of course, they will be having more people spending. If more people are spending, of course, more people are doing what? If you have more people with jobs and good jobs and salaries, that is to mean more people can spend in the economy, and of course, the currency will be gaining. Then we have durable goods. Report gives a measurement of how people are spending on long-term purchases. These are defined as products that are expected to last more than 3 years, like a car, TV, or those other goods. The report is released, these are called durable goods. The report is released at 8:30 EST around the 26th of each month. So, and then another thing, guys, I don't know, maybe we might be having new guys. So you can always chat us there. Q&A. in case got any. So you can always text as we continue with class there, guys. So let's continue. So I was at durable goods. Then we have retail sales. Retail sales index measures goods sold within the retail industry from large chains to smaller local stores. It takes a sampling of a set of retail stores across the country. The retail sales index is released at 8:30 EST around 12th of the month and will reflect data from the previous month. This report is often revised. So retail sales basically is everything at the retail level, from the large chains, small local stores, supermarkets, all those are under retail sales. So we just want to measure how basically is the retail sales doing. If they are higher, of course, people are buying more. If people are buying more, that currency or that economy should be strengthening more. Then we have housing data. Housing data will include the number of new homes that a country began building that month. So this is more on the real estate sector. Residential construction activity is a major cause of economic stimulus of a country and will likely be followed by forex participants. This is an example, maybe where you come from. If you see new buildings coming up, maybe there's a mall, there's, the roads become better. That is to mean, of course, real estate is booming. People are buying more houses or apartments. That is, of course, to mean there's economic activity. So existing home sales, look at these guys, existing home sales are a good measure of economic strength of a country as well. Low existing home sales and low new home starts are typically a sign of sluggish economy. So if guys are buying more homes, of course they have money. And if they have money, there's more activity on the real estate. Of course, the housing also, the guys in real estate are building more and they are selling more. That is to mean the economy should be doing very okay. Then we have interest rates. This is what we'll be looking at. So after code inflation, I think inflation, I've been able to explain about the purchasing power going down over a period of time and prices of goods and services rising. Interest rates now, these ones are the main driver in the forex markets. These are what defines what we do every day. All of the above mentioned indicators are closely watched by the Federal Open Market Committee in order to gauge the overall health of the economy. So what we are looking at is the economy doing okay? How is the health of this economy? If it's doing okay, of course, more investors will be pumping in more money in that economy. And that currency should be gaining and people should be looking to purchase those greenbacks. So the Fed can also use tools as it's disposable to lower. So on the interest rates, they will either lower, raise, or leave interest rates unchanged. So you'll hear comments like hawkish or dovish. If you're hawkish, you're looking at a hawk. A hawk mostly it's looking to go above. Dovish, we're looking at a dove. Dove mostly comes down. So dovish, we are looking at cutting the interest rates. Hawkish, we're looking when the interest rates are being raised. Then we have sometimes the interest rates remain unchanged depending on the evidence it has gathered on the health of the economy. So while interest rates are the main driver of forex price action, all the above indicators are also very important. So on the interest rates, guys, let's have a look at what we are looking at this week. So this is a very busy week. I hope you are all looking on the market. So everything I have told you is important. But what you do on this site, you are able to see, we call it the economic calendar on Forex Factory. So on this Forex Factory, I really like it because we have over 150 to 200,000 traders here where you can exchange ideas. You can see even stories, comment, replies. You can see there are over 600,000. So you can see this is what I was talking about. So this week we have had CB. So let me explain because I've given you a little bit of inflation and employment and the rest. So let's see, since Monday, today is Tuesday. So today we have CB confidence. What is CB confidence? CB confidence, this is the business confidence that people have. You can see financial confidence is a leading indicator of consumer spending, which accounts for majority of overall economic activity. Survey of about 3,000 households, which kept respondents. So this one is the business confidence. Business confidence, this is to mean people need to know, are they confident enough that the economy is reopening? Are they confident enough that the economy is doing well? Then we have CPI. CPI, I've touched on it, on AUD. So there'll be big move on AUD, trimmed CPI. CPI, as you have said, let's have a look at it. It's the change in the price of goods and services purchased by consumers. So as I told you, all the goods and services that are purchased by consumers, actual greater than forecast is good for the currency. So we are looking at this number here, guys. You can see this was the previous 0.9 forecast, then it came as 0.6. So this was bad. That's why you see AUD was really losing, or it has been losing. So if this number is greater, so by today, yeah, for 30 a.m. So it's by today morning. Today is Tuesday. So tomorrow morning, that is 4:30, you can wake up and trade this AUD. If this number will be greater than, we are looking at the currency gaining. But if it will be lesser than 0.7%, to be losing. Same case for trimmed CPI, but trimmed now is the change in price of goods and services purchased by consumers, excluding the most volatile 30% of the items. Most likely, you will see data represent underlying inflation trend through component. Okay. So this will be minus the agriculture sector because it's usually very volatile, weather patterns and all that. So that's why it's called trim CPI. Then we'll also have another CPI on CAD. Same thing. If the value is higher, so you can see CAD was gaining. The last CPI was good because you can see it was green. The forecast was 0.4, actual was 0.5. So I was really following CADN and CADCHEF. Of course, made some good returns. So this will be for Wednesday. So Wednesday is a big day. Also, FOMC statement. These are the interest rates. You can see they have been remained unchanged since March last year. So you can see the graph here. So this is what we'll be looking at. What will the Fed do? So you can always pull out the graph here. Not this one. Yeah, it's not the graph. So let me show you guys. So this is FOMC statement here. So this is what I'm looking at. So you can see, guys, it's remained 0.25. But on March 16th last year, they cut the interest rates. You can see this was 1.2, 1.7. Then they cut it by 1 basis point. So when they cut the 1 basis point, you can see from almost 1.25, almost near zero. So we'll be checking this tomorrow. So tomorrow is a big day. I hope guys will be online because tomorrow there'll be serious activity. Then on Thursday, we have advanced GDP. GDP, I told you, is the total value of all monetary goods and services produced by the economy. So this will be the first. So we need to check how the US economy has been doing on GDP, annualized change in inflation, adjusted value of all goods and services. You see, everywhere I'm going, there's inflation. So that's why I really needed us on this class talk about inflation. So within the next few minutes, let's have a look at a little chart. So this is my Euro AUD. So now I'm looking at the Euro versus, so let me do that. So no, I was to check at the Euro Yen. Yeah, here's the Euro Yen. So this is my Euro Yen, Control G. Then I'm going just to draw my support and resistance. So I do this, I zoom out a little bit so that I get my support and resistance. So you just draw them the way you see me draw them. And then from there, you're good to go. So you can see, I think that's more than enough. Then I'm going to add RSI. Is RSI. So, okay, so there we are. So this is the only pair I'll be looking at, Euro Yen, but I'm looking at it on a shorter time frame. So all I'm doing, yeah, around there. So let me zoom out so that I draw my trend line. So I can see there was a trend line here, from here all the way here. Guys, you can see that was a strong trend line. You can see there was also another strong trend line here. So there. So this is on 4 hours. Okay. Then apart from that, now I go to 30 minutes, zoom out and get support and resistance around there. So there's something I want to show you guys. Now we go to H1. So you can see there's a triangle around this area. So let's go back to M30, M15 there. Then we have a strong support around this area where the price is. So what I'm going to do, I'm going to show you that support from down here. So let me zoom out. Yeah, at least you can see it, guys. There is this support here. So the reason is you can see it's been 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So this price, where the price is, it's been retested almost 5, 10 times. So that's how my trend looks like. So what I'll do, you can see on RSI, it's crossing 50 going downwards. But since this is my strong, this line where the price is, that is a very strong support. It's been retested almost 10 times. So what I'll do, I'll go to a shorter time frame and wait. Then you can see it has already broken also the trend line going up, because the trend was going down. You can see, guys, from this point on H4, you can see the trend line was going down. From up here, it goes up, goes down, touches, goes down, touches, goes up. So we can see 1, 2, 3, 4, 5. So you can see right now we are at this zone. So what we do on Euro Yen, now we wait, because all we need is a breakout going down or breakout going up. So what I usually do at this moment, I wait. But you can see, this is what I wanted you guys to see. You can see we are at an oversold. So for me here, all I'll be waiting is for this RSI to cross a little bit of 30. If it crosses a little bit of 30, now I go to H. Now I'll be tracking it with M30. Then it's good, guys, to always use these separators, because they show us between now and midnight how much money we should be making. So the price here has been really oversold. The reason is, you can see also we have a very strong doji here. So now this one we wait. You can even go to M15. Yeah, you can see M15 now it's about to cross, because you can see there's like a W here about to form. But this one we wait. So I didn't want to do a lot of technicals today. So I just wanted to show you the Euro Yen. I'll be seeing if I'll make some pips there, maybe around 70, 74 pips. So, but for this today, I wanted us to touch more on inflation, and also fundamental analysis. So for fundamental analysis, you use this. I also have Bloomberg here. Is the site, Bloomberg Financial. You can check it on YouTube. There's also investing.com, but at least between this one and this one, because all I need is this economic calendar. So what's the difference between technical and fundamental analysis? We did a lot of technical analysis. So technical analysis, fundamental analysis are two main schools of thought in trading and investing in financial markets. Technical analysts look at the price movement of a market and use this information to make prediction about its future price direction, while fundamental analysts look at economic news, also known as fundamentals. Now, since nearly any global news event can have an impact on the world financial markets, technically any news event can be economic news. This is an important point that I want to make, which many fundamental analysts seem to ignore. So one of the main reasons why I had all the, okay, we don't need to go to all that. So at least today, it was more of fundamental analysis. So guys, unless we have any questions, we should have less than a few minutes, then we are done. So this is time for Q&A, guys. So in case you have any questions, we recorded the class. You can always check it out. So in the next few, now we are done. So with that, we can call it a day. So we link up on Thursday. Though Friday will be having a session with those guys who will be online in case you've been having setup. Then we'll talk more. And with that, we can call it a day. So thank you guys for your time. I'll link you up on Thursday and Friday. And have yourself, guys, have yourself a lovely, lovely day. So in case there are no questions, we should be done. So then in case you're also new, we'll be starting another new class on next month. Existing members, we still continue with our sessions, even the one-on-one sessions. So guys, thank you so much for your time. And I'll be looking forward at least to, so tomorrow be online, because we'll be doing a lot of news tomorrow. So tomorrow and Thursday, then from there we can call it a day. So in case you have no questions, guys, let me wish you guys a lovely day. So I'll talk to you guys more on WhatsApp in case you have any queries, setups, or anything you need us